There's a coin that's lost over 70% of its value since October. It's been locked inside a descending channel for 7 months. And right now, it's sitting on the exact support level that has held every single time. The question is this finally the breakout setup or just another bull trap before the real drop? This video is for educational and entertainment purposes only. Nothing here is financial advice. Always do your own research before investing. Before we get into the charts, let's quickly cover what Aster actually is, because context matters. Aster is the native token of Aster Chain, a Layer 1 blockchain that officially launched its mainnet in March 2026. It's built within the BNB chain ecosystem, meaning it's targeting DeFi users and DEX liquidity that are already familiar with that infrastructure. What makes it slightly different from the crowd? A few things. The project recently introduced a staking model that reduced token unlocks by 97%, which, if you understand tokenomics, is a meaningful move to reduce sell pressure. They've also attracted some speculative attention by listing SpaceX pre-IPO perpetuals, which puts them in a niche that bridges crypto-native users with traditional finance narratives. It's not a household name. It's mid-cap, relatively new on mainnet, and still proving itself. Keep that in mind as we go through the charts. Okay, let's get into the chart. And I want to be completely straight with you about what I see here. The 4-hour chart on Binance tells a clear story. Aster has been in a sustained downtrend since October 2025, when price peaked at around $2.50. From that high, it's dropped over 70%. That's not a minor correction. That's structural distribution or capitulation, depending on how you read it. The descending channel is still fully intact. You can draw the upper trend line connecting the lower highs all the way from October to now. It hasn't been broken. Every attempted recovery has been sold into. That's the honest reality before we talk about any bullish scenario. Now, the one thing keeping this from being a pure short setup is the $0.64 support zone, marked in green. This level has been tested multiple times and has held each time. That's significant. When a level gets tested repeatedly and doesn't break, one of two things is happening. Either buyers are genuinely defending it, or it's building pressure for an eventual breakdown. The chart alone can't tell you which, but repeated holds at the same level do carry technical weight. Current price is sitting right at $0.6963, which means we're essentially at the $0.70 resistance level right now. This is the first meaningful ceiling. Above $0.70, the next resistance worth watching is 80 cents, which aligns with a previous consolidation zone inside the channel. Volume at 120.85 million is notable. That's elevated for this asset. When volume spikes at a key level, it signals decision time. The market is paying attention here. Bottom line on the chart, the structure is bearish until proven otherwise. A close above $0.70 with sustained volume would be the first sign that something is genuinely changing. Until then, the descending channel remains the dominant pattern. Let's talk fundamentals, and here's where it gets more nuanced. The mainnet launch in March 2026 is the most important development for Aster in the last year. Launching mainnet transforms a project from a promise to a product. That matters. But, and this is critical, mainnet launches are often sell the news events, and the chart timing suggests this one may have been too. Price didn't rally on the launch, it continued lower. That tells you the launch alone didn't change market sentiment. The 97% reduction in token unlocks via the staking model is genuinely positive from a supply-side perspective. Fewer tokens hitting the market means less mechanical sell pressure. If demand stabilizes or grows, this creates a better foundation for price recovery. This is one of the more credible bullish arguments for the token. The SpaceX pre-IPO perpetuals listing is interesting, but I'd be cautious about how much weight you give it. It attracts attention and trading volume, but it's speculative by nature and doesn't necessarily reflect the health of the underlying protocol. Being embedded in the BNB chain ecosystem gives Aster access to an established user base and existing DEX liquidity networks. That's a real advantage over projects building liquidity from zero. Fundamental verdict: the project has real development milestones. The tokenomics improvement is meaningful, but the market hasn't rewarded it yet, and price is the ultimate arbiter of sentiment. Two scenarios, clearly laid out. Bullish case. Aster breaks and closes above $0.70 on volume. That would be the first real crack in the descending channel resistance. The initial target from there is 80 cents, and if momentum follows, $1 becomes a realistic medium-term target. That's not a crazy number. It's still 60% below the October high. Bearish case. Price fails at 70 cents and rolls back down toward 64 cents. If 64 cents breaks with conviction, meaning a daily close below it, not just a wick, the next meaningful support is around 52 cents. That would represent a new low and would likely accelerate selling pressure. The risk that doesn't show up on the chart: this is a relatively new mainnet with limited track record. Execution risk is real. If the team delivers, the tokenomics improvements matter. If they don't, no support level saves you. That's the full breakdown. No hype, just the chart and the context. If you're watching Aster, the 70-cent level is your line in the sand right now. Respect the trend until price proves otherwise. If this kind of analysis is useful to you, subscribe. I cover setups like this every week with the same level of honesty, whether the picture is bullish or bearish. Drop your Aster thoughts in the comments. I'm genuinely curious what you're seeing. And as always, this is not financial advice. Do your own research, manage your risk, and never put in more than you can afford to lose. See you in the next one.